Okay, when it comes to trading, trading simply explained means that you're either buying or selling, for example, cryptocurrency with the intention to make money. Okay, you need to understand that the price of cryptocurrency or a specific asset, a market, whatever, constantly fluctuates. It's always going from lower to higher, from higher to lower, you're sideways ranging. And then again, we are coming back to these three main trends, of course. But then the main goal as a trader is to buy and sell at the correct moments. Okay, so whenever you understand price action and you can give an educated guess and as when price potentially is going to bottom out or potentially going to peak, for example, those are the moments where you would like to buy or sell. So for example, very simply explained, this was of course a perfect moment to buy Bitcoin because you can see that it made a huge pump. It moved insane, you know, it made a very beautiful move from lower to higher. But then again, this second circle, this would have been a perfect moment to sell, okay? Because eventually, as you can see, after hitting, for example, 74,000, Bitcoin eventually goes all the way to lower. And whenever you can anticipate on these dumps or so-called pumps, that's how you make money. So trading, again, in its essence, we are profiting of fluctuations, as in price movements of an asset. That's about it. So we can either buy or sell, of course. However, when it comes to trading, we've got two different directions which we can take. We can either long, okay, we can take a long setup, a long position, where you're actually, you are buying low with the intention to sell higher and selling higher, or, and this is a somewhat more confusing concept, but allow me to elaborate later on in the course of this video, of course. You can short, where you can buy higher and sell, or where you can, pardon me, where you can sell higher and buy back at a lower price. You are selling high and buying back lower, okay? So these are the two main directions. And if I can elaborate a little bit more on this, this is immediately one of the most important differences between investing. Okay, so if I can just make a very simple table, something like this, and I would say this is, let's say, trading, okay, and this is investing. Let's just call it invest. This is one of the main difference. Okay, so first of all, you need to understand that when it comes to trading, you're actually not really possessing anything. You're actually lending something from a specific broker or a specific crypto exchange. Trading is lending, okay? So you are lending, let me just, lending crypto assets. And when you're investing, you're actually possessing, as in buying stuff, okay? So when you buy stuff, you actually possess the cryptocurrency, okay? So for example, when somebody tells me like, hey, I trade with 1 Bitcoin, I don't own it, okay? I just trade, I have lent 1 Bitcoin, but I need to give it back at a certain time, whether, you know, it's in profits or whether it's going to be in a loss. But when it comes to investing and somebody comes to me and says like, hey, Johnny, I bought 1 Bitcoin, then he possesses 1 Bitcoin. This 1 Bitcoin is his or her property, so to say, okay? Ownership, okay? And then the main difference when it comes to trading, and that's a beautiful part, whether price goes from lower to higher, as in long, or whether it goes from higher to lower, as in short, you can make money both ways. And hopefully this is going to trigger you, and hopefully this is going to give you some more interest in the entire trading aspect of everything, okay? Because you're not really dependent on the market circumstances. You don't need to wait weeks, months, years for new investment opportunities arises. However, you know, investing is just very simple. You can only make money by buying low and selling high. So you're very dependent on the market circumstances, and you just need to understand as well that the market never exponentially goes up all the single time. There are months and years where you're going up, and there are months and years where you can potentially go down. So you really need to be very disciplined. You need to be very patient when it comes to investing. These two arguments, or these two things, are the main differences between trading and investing. Now I'm going to explain the shorts, and again I will be making use of a so-called replay tool. This concept is a little bit more confusing to understand, but again, allow me to explain it a little bit better. Again, we can make money from lower to higher, longs, and we can make money from higher to lower. But how does this last concept actually work? So let's just assume that whenever price touches 70,300, the price goes lower. Again, we can't work with any guarantees. We are not working with 100% certainties. We are making speculations. We are making assumptions. And we are pretty much hoping that whenever price touches this particular level, the price goes down. So this is the intention. This is something that we need to take into account before we are taking a specific trading setup, okay? So basically what I'm saying here, whenever price touches this horizontal line, this white line, I'm pretty much expecting Bitcoin to dump to lower prices. And then eventually, of course, just like a long setup where we know where to buy and to sell, we also need to understand this, of course, for a short setup. And in this case, I would like to sell it at a price of 66,000. So what actually happens? In this case, whenever price touches my level, boom, the level has been touched. Basically what happens is as follows. First of all, you need to understand that we borrow. When it comes to trading, again, we are always borrowing specific coins, or the quantity, okay? The quantity, it depends per trade, of course, but that's whatever. I borrow, in this case, again, one Bitcoin at a price of 70,300. But instead of holding this one Bitcoin, I am immediately selling this one Bitcoin for the exact price where I want to short at. Okay, so I am immediately selling this one Bitcoin at a price of 70,300. So hypothetically, or just to make it a little bit more clear and visually understandable as well, you had a Bitcoin, but you sold it for 70,300. So this is the money that you currently have in your pocket. Okay, but again, you do need to understand you're not necessarily in debt with the respective crypto exchange for 70,300. You're in debt for one single Bitcoin. So as you're anticipating that price eventually dumps after hitting your level, that's where actually the money comes from. So 3, we hope and we wait. I wait for price to go lower or to fall, so to say. And then eventually, as you can see here, in this case, the trading setup would have been a W. And whenever price comes to this particular point, I am buying this one single Bitcoin back at a price of 66,000. I am buying the same amount of Bitcoin, which is one Bitcoin, back, but now cheaper. And in this case, at a price of 66,000. So as we have this, as we have bought the one Bitcoin at a lower price, now we can just simply give our one single Bitcoin back to the exchange, which we were initially in debt for. I return the borrowed amount, one Bitcoin, to the exchange. And then in this case, of course, the price difference, that's the money. That's where we make our money. Okay, so that would be 70,300 minus 66,000. So that's a profit of $4,300. And that's about it. So we borrow something, we immediately sell it at a higher price. We wait for price to go lower. We buy the borrowed amount back, but at a lower price, and the price difference after having given everything back to the exchange, that's where the money comes from. So this is the shorts.